Here we are. It's the middle of April 2021. Mr. Matthews, as always, here to talk about stats, charts, figures. Loving the do. Loving that. I feel like
Uh,
the most amount of time I take getting ready for this is not so much the research as it is trying to get my hair under control.
oh
Could
my
use a
gosh,
haircut.
yeah. I use half a can of hairspray just to keep it in place, man.
Love it. Love it. So
uh,
let's dive right into things. You can see my screen. Yeah, we're good.
yeah, we're good to go.
Awesome. So our monthly market update, just a reminder to everybody who hasn't tuned in before, anybody that hasn't, we're talking primarily about the downtown core. If you are interested in east, west, north districts, we're happy to send over our stats, starting off low rise, and then we'll get to high rise. So low rise stats and figures, a 12-month rolling average intended to smooth out those seasonal fluctuations that we'll talk about in just a minute. We can see that all low rise home types, no big surprises here. Average values are up pretty substantially over the last 12 months. No big surprises here. Would you agree?
Yeah, it's pretty
Yeah.
much, I think where we thought it would be after our last video last month. So it's pretty much
No,
in line.
no big surprises. And keep in mind the townhouses too. You do have smaller townhouses so you can get 500 square foot stacked townhouses put together into in the same group with full, 3-story or 4-story
Yeah,
homes. So that 0.1% flatlining there increase in home prices isn't likely representative because there could have very well been a larger percentage of smaller stacked townhouses that sold. So we can discuss that more if anybody's ever interested. Number of sales, demand. Again, low rise, no big surprises. What I have highlighted here is that when we're comparing, actually what we should discuss at the very beginning is last March, because our statistics are lagging, last March is when the pandemic kind of began, if you will. So the next 2 to 3 months of statistics are going to seem really wonky.
yeah,
Because if you remember, most people were in some form of a stay-at-home order March through the end of April of last year. A lot of people decided not to list. We were really unsure, didn't know what was going to happen. All those analysts that talk about massive correction happening, well, all the hundreds of thousands or millions of dollars that your salary generated for you, you were wrong. And we were all wrong. So it's hard. I'm not faulting them, but I also think that it's difficult to make the call over the last year. But keep in mind, the next few months of statistics are likely going to be heavily skewed. Looking at the
yeah,
10-year average, you can see that sales activity for the month of March is up for all housing types. No big surprises. The pandemic began. This is the average price chart. You can see that red line is slowly moving back. We're getting further from the beginning of the pandemic. And there are those seasonal fluctuations, but overall, detached home prices are up. Semis are up, townhouses are up, and we'll talk about condos towards the latter half of this presentation here. New listings, new properties that are coming to market, a 43%, 70%, 49% increase in different housing types. Again, highlighted the 10-year average for the same month, showing that more or less we're kind of in line with our 10-year rolling average for new listings. And active listings, 3% increase. This is, I think, the first time in a couple of months that we've talked about an increase in detached active listings. And don't get too excited about that. We'll mention it in a minute, but a 3% increase in active supply for detached homes, a 30% increase for semis, and a 31% increase for townhouses. Again, this is March 2021 versus March 2020, which was a bit of a weird month. If I
yeah,
look at the 10-year average though, for the month of March, so the last 10 years, number of active listings is down 12%. So this is really interesting. And down here at the bottom in my scribbles, I put the number of sales for this month and then the 10-year average for the number of sales. So for detached homes, we had 12% less supply, but a 42% increase in sales. So demand is still outstripping supply, which is why we continue to see these bidding wars across all categories. 19% increase in active listings for semis, 60% increase in sales. So no big surprise here, in my opinion, as to why you're still seeing those bidding wars. Would you agree?
mhm. I agree. Yeah, it's
Yeah. Nothing here really is, I think, eye-opening for anyone. Months of inventory, we can see we've trended downwards. We had a slight peak and we've trended downwards. The balance market, this is a 12-month rolling average. Balance market's up here. We'll talk about condos in a minute. And then finally, the single month of supply. So taking a snapshot of what happened in March. I mean, this is why we're still seeing ridiculous prices for some of these properties that are holding back. Now, we will add to this in just a minute, but with less than a month of supply, so if nothing else came to market, in about a month, essentially all the housing types, all current listings would be gone, which is why you still see that that competitive marketplace out there, right? And
Yeah.
then sales to new listing ratio for, let's call it every 10 houses listed, 6.7 semis are selling. So again, all roads lead to very, very busy market, right? Let's
Yeah.
talk high rise. This is where it starts to get a little bit more interesting. The average price is down 3%. But again, please take this with a grain of salt because we're averaging out the last 12 months of activity. The fact that there's only a 3% decrease is actually a testament to how strong the condo market is. When I look at our average price growth over the last year, the fact that we're kind of back up to this our 12-month rolling average is not surprising. The last 2 months of condo sales activity has been robust, to say the
Yeah.
least. I mean, I'm surprised at how quickly it turned.
Me too.
This is where we start talking about interesting figures. When you break down the number of sales in each different price bandwidth here, and then the average price increase, you can see where you do get that average price correction. I don't love average price, we'd rather use the median. But if you look, that $350,000 to $750,000 price range, 100 to 300% increase in sales activity over last March. Again, I know last March was a little weird, but the average price change over since that time last year, which was pre-pandemic for the most part, really reminds us how strong prices have rebounded. And that $2.5 million price range is really dragging down the average price. But when you talk about 2.5 million plus, you could get a home sale last year. You might have had 3 or 4 sales in the $6 to $7 million price range, whereas this year you only had 1 or 2, and that can pull the average price down. So take all of this with a big, huge grain of salt. And again, we have these for detached semis and other townhouses. If you're interested, just let us know. Number of sales for condos up 105%. 10-year averages were still up 75% for the month of March. And this is a graphical representation of what's going on. So I'm not saying that the vaccine announcement in December really kind of sparked interest, but when we would normally experience a dip, a seasonal fluctuation or a seasonal dip in sales activity, we saw the exact opposite. And this is what I saw. I remember a few properties that I had that were sitting on the market for 30, 60 days. And all of a sudden, December, we were selling and we sold for full price, which is a bit unusual after 60 days on the market. But we continue to see, like, there's a huge increase over the 1, 3, 5, and 10-year average number of sales for this time of year. Like it's very, very busy.
Yeah, it's funny because I mean, if we go back, and we're having our conversation in November of last year. I mean, there's no way we would have thought this line would be this way. We thought it was continuing to actually to maybe go down still with no immigration and maybe some added supply, but just to have almost like a V return back to the market in the condo sales. I mean, like you said, it's really caught us all by surprise.
I couldn't agree more. I'm going to skip over new listings and just go to active listings for condos. So we had a 35% increase in active listings. But if I look at the 10-year average, we actually had 15% fewer active listings on the market for the month of March. Contrast this or compare this to a 105% increase in sales activity this year and a 75% increase in sales activity over the 10-year average for this month. That's why you're seeing these condos get such strong sale prices. Like, I mean, no big surprises here. And then again, the months of inventory, as quickly as we went up, I was of the belief that we were going to kind of linger up here, around here before coming back down slowly. But for us to turn a corner like this was a huge surprise to me. And then looking at the single month of supply,
This
if
is crazy.
nothing else was listed today, in less than a month, there would be no condos on the market. So that's the reason why things are selling so quickly and for such strong prices. But we do have to be aware that right now we are into this current stay-at-home order. How is this going to affect the market? I do think that the next 1 or 2 weeks will be a defining moment as to whether or not people's expectations will continue to be met. We're going to talk about an opportunity window right now. Looking back at the last year, when did the opportunity exist? But my belief right now, and Christian, feel free to let me know what you think. I think that the stay-at-home order has a few people just sitting back. We're in the midst of the third wave, the worst part of the pandemic in terms of cases. People are a little bit hesitant to get out. We know that it's spreading rapidly. We've been told to stay at home, and people are also reading the newspaper, and it's like prices are up 30% in the suburbs. One day y'all are going to have to come back, or maybe you won't, but y'all are going to have to come back downtown to work. And if that means 2 days a week, and you bought a wonderful, much larger home in Barrie or Newmarket or Pickering, be prepared for a very long commute. I mean, I had to drive up to York University the other day or in that area to drop something off. And it took me an hour and 10 minutes. And it was like 2 o'clock in the afternoon. There's no one on the road. So
Yeah.
if you add in normal traffic, it's going to be a nightmare once we get back to normal levels of immigration, and the return to some degree of normalcy. This is just my opinion. Okay.
Yeah.
So what I wanted to finish off today on two things. Number one, rental market is down. It's going to continue to lag. I am seeing a bit more activity though. So landlords, prices are not where they were 18 months ago because this correction started pre-pandemic. But I'm starting to see for properties that have priced according to current market conditions, more activity, which is great. Renters, you're still taking advantage of 10, 15% decreases from the peak. But let's talk about opportunity, because everyone wants to time the market. If you're trying to time the market, don't. That's my opinion. Okay, buy a home, buy an investment property, a minimum 5 to 7 years. Okay, if it turns out that you can sell it in 3 years and cash in and make a whole bunch of money, great. But if you need to ride out those interim ups and downs, at least you've planned on that from day number one. So looking back, we always say, when did that opportunity exist? And this does not mean that the opportunity meant you get a great deal, because deal is not something that I've thrown around during this pandemic. But when was inventory supply slightly higher than it had been in previous years? So if we look at each housing category, detached homes, you had a month, the middle of July through the middle of August. And this doesn't mean that you got something for less than market value. It just means that you probably weren't competing against 35 other offers. Maybe at that point you were competing against 20 other offers. But there was like a window here of a month where supply was just a hint higher than it had been over the last 10 years. Semis, okay, we saw the middle of July through the middle of October, where once again supply was just higher than it had been over the last 1 to 10 years, right? Yeah. And again, this doesn't mean that you got a deal. It just meant that you probably weren't competing against as many people. Townhouses, kind of the same. It seemed that it was in the middle of the summer through the fall. And this is where it's most interesting, because for condos, inventory supply really did start to peak, or really grew in the summer and lasted through November-ish. And then, as we said, with sales activity, you saw, everything here makes perfect sense. Inventory level grew through the summer. Then it started to drop off as sales activity we previously commented on started to pick up in December. Now, just because sales activity picks up, you have to erode away at all this inventory, which took some time, not too much time, but it took some time. So we are now below the 10-year rolling average, which is why prices have started to really rebound. The question becomes, what does the future hold? I can honestly tell you that I could make speculations, I could make assumptions, but even the best analysts, even the CMHC, some wonderful realtors that we follow, John Pasalis, Scott Ingram, there's a number of others that do some great work, looking at their stats and charts, much the same. I think in a lot of ways, we're seeing just a bit of a hint of an increase in supply, but that might mean that instead of competing against what, Christian, 10 or 15 offers, maybe you're competing against 2 or 3. So you're still competing, just not against as many.
Yeah, and personally, I can attest to that, because I've been putting some offers in with clients, and going back, if we're talking February to mid-March, it was double digits on every property, but now we're seeing 3, 4, 5, 6, 7 offers. And I think also like you said, we're seeing more product come to the market. Not a lot, but it's slowly increasing. So it's spreading out the buyers and what they can choose from, which is helping buyers a little bit. So we're not seeing the craziness out there, but again, it's still very low inventory, still a hot seller's market. But there just has to be expectations met when you're talking to sellers, and what to expect on offer, right, if they're holding back.
Everybody wants that moonbeam sale price, but it doesn't always. Likely what you're selling for is still a huge gain when you think about people's initial investment, because very few people are paying cash outright for their property. So if you think about the return on investment based on your initial down payment, you're probably running at a 500% return on your investment. I don't know. It could be even higher in some cases. But I think I would agree that it's all about expectations. I certainly didn't think that we'd be where we are now in the midst of the third wave, the worst part of the pandemic in terms of cases, the government telling us to stay home, people getting sick, you know, the media picking up on how much housing prices have increased, whether it's downtown Toronto or in the suburbs, and rental prices being down, like investors being so bullish on where the market is headed, when it's like, if you look at the average rental price today versus your purchase price, even if purchase price of condos was down, which again, it's not, in my opinion, down, you know, 3, 4, 5%, with rents down 15 or 20% at their low point, you're worse off buying that investment property today and renting it over the next 12 months. You really have to be banking on, you know, rents returning to some pre-pandemic levels over the next 12 to 18 months for you to be justifying or perhaps taking advantage of a slight dip in prices if you were lucky enough to have had bought last year in the summer or in the early fall. So let's leave it there. We'll regroup again next month for probably some wonky statistics. It'll be interesting to see how the stay-at-home order had any effect, if any effect, on the market, on multiple offers and people's expectations. I'm tracking a number of properties here in the city just to see what they sell for. And you know, other than that, wow, if you have, if you're on the hunt for properties, we've got stuff all over the city: Leslieville, downtown core, penthouses, small condos, you know, big houses, small houses. There's a lot in the
got
works.
It all.
We
got it all.
As long as you're looking downtown, we probably have something that fits the bill. So reach out and we'll go from there.
Let me just add to it. What I think what we're going to find out in a couple months too is how this new stress test is going to affect buyers.
Yes.
Like, is that going to be enough to slow things down? I mean, everyone's saying probably not, but again, we have no idea how buyers are going to react. So we'll make sure we bring in the stats in the next couple of months to let you know how that's affected people.
Yeah, I would agree with you. I don't think it's going to have too much of an effect. I think the government, you know, really wants the real estate market to continue on its tear. And it's unfortunate because a lot of people who make good money, good down payments have been forced out of the purchase market, and it can be terribly frustrating, right? I mean, it's frustrating for us when you're trying to help people buy, and it's like, well, here's the logical value, and here's what it's going to sell, right? So we'll see what happens. But anyway, let's leave it there. Always amazing chatting with you, catching up, seeing you virtually, because this is how we see each other now. And we'll be back to report again next month.